Markets are flat with a negative biased 8 odd points decline, but the movement in the markets is very, very low. Volatile moves in markets are low. Volumes in the market, at least in the first half of trading session, is not that great. China has bounced back, as you can see at the bottom of your screen. It's up about 6.5%, but definitely the big question is whether this bounce sustains or not. That was the key reason why global markets fell down yesterday, and today it's looking slightly stable, at least for some of the other global markets ex-China. 8K Miles declared its numbers. Bumper results 6% higher for the name. Greater than 100% growth in sales as well as PAT. This is the fourth or the fifth straight quarter that they have continued to grow so strong in terms of YOY growth as well as on a quarter-on-quarter basis. More than 20% growth on the sales front. Mr. Suresh, chairman at 8K Miles Software Services, is now with us on a Skype link from San Francisco. Good afternoon, sir. Can you just explain the numbers for us? How are you managing to give more than about 100% growth quarter after quarter? What is the business momentum? How is this growth coming in? Mr. Suresh, can you hear me? I think that Mr. Suresh cannot hear us. We'll just get that fixed. But in the meanwhile, I'll just read the results for you at a glance. The name is up 6%. 8K Miles is up 400% in the last 1 year. It's up about 39% on a YTD basis. In 1 year, that's in about 12 months, is up about 408%. If you look at the numbers, revenues were up 20% quarter on quarter. These are quarter on quarter growth. EBITDA was up 24%. PAT was up about 15 odd percent. Sales now came in at 50.5 crores. This is up QOQ on a QOQ basis by 20%. PAT came in at 7.2 crores. EBITDA up 24% at about 15.8 crores. And they have also done an acquisition during the quarter. Mr. Suresh, chairman at 8K Miles Software Services, is now with us. Sir, if you could just break down the quarter, what led to 100% plus growth on a YOY basis or 20% growth on a quarter-on-quarter basis?
We consistently growing on our cloud transformation business. And also in the healthcare sector, we are seeing a good growth. So basically, we did last quarter 42 crores, and this quarter we did about 50 crores. The growth came from our healthcare and pharma sector.
Right. Do you expect such high growth of 100% plus to continue?
Historically, the last few quarters we are performing in a similar way, and we hope to achieve the same numbers. And we do see a great opportunity in the space. As you see, the cloud market is evolving very big, and Amazon reported a $5 billion in the last year. And we see a great opportunity. Same thing is happening with the Microsoft. And we partnered with both Amazon Web Services and Microsoft, and focus on a healthcare and pharma sectors, where we help a large enterprise into cloud transformation. So as enterprises adapt more cloud, we see a great opportunity for us to scale the revenue numbers.
Right. So with such sort of growth coming in, you would also need to invest a lot. So do you think that margins, at least in the near term, may not expand much?
Of course, you're right. Actually, we need to invest a lot because the growth we can able to achieve a much bigger numbers. So we focus on the revenue growth and the leadership position. So we are currently investing a lot on the technology and also in the sales and marketing expansion. We recently hired strong leaders for account management, and also sales leader we hired now recently from a General Electric healthcare practice. So we continue to invest in sales and marketing, but over a period of a time, we could able to improve our profitability with our SaaS offering picking up. Like our Easy Cloud RX we launched last quarter, we already got 2 customers this quarter. So it's a lot of, we see a good growth opportunity in that. Our profitability will significantly improve with both managed services and a SaaS model. These are the key drivers for our profitability enhancement, because they are not actually depend on a revenue basis, by people basis actually. These are not proportionate with the people growth. It's more with the software services model. So that will enhance our overall profitability in the coming years. But for the shorter term, we really look at growing our revenue top line, which is very critical, because so that we can able to achieve a certain critical mass in the large enterprise segment.
Right. You also said in the start that healthcare and life sciences business is leading to this growth. In the near term, these are the two main sectors that you would be focusing in on for higher growth.
Obviously, yes. Because the reason is these two markets are very regulated markets. When I say regulated, they require a lot of compliance, and security is a very, very major issue for them. That is one of the very key specialty what 8K bring to the table today. So we actually built a lot of software and security services on both on the healthcare and pharma. But over a period of a time, we may also add additional verticals because we see some opportunities coming in the BFSI sector. Probably you may know, like in India, Microsoft has already opened their cloud data center even in Chennai now, and Amazon is going to open very soon in the India. So these kind of things, like when the local cloud data center available, then even a financial services market will adapt. But the biggest advantage what we see for the 8K is we are very strong in security and compliances, which is a very key requirement for a healthcare or a pharma or a banking. So because we support today HIPAA compliance, GFX compliance, and also PCI compliance for the financial sector. So these are the areas where we really focus for further growth. However, we see with our services, we get a lot of opportunities in the retail CPG segment too, where like a predictable analytics market is picking up. So we see a great opportunity in multiple sector, but we focus like our 80% effort today on a healthcare and pharma.
So as you said that there are entry barriers because of a lot of norms that they have. You, in your release, said that we've added new customer logos in healthcare and life sciences. What part of your revenue will be coming in from healthcare and life sciences, and how does this give you an advantage vis-a-vis others? Do you think that the growth or the margins from these existing clients would only tend to increase because of the entry barriers?
Yes, it is not only for the existing clients actually, it is also what we see a great opportunity from a new clients started adapting in the cloud. If you see the healthcare market or pharma, adoption of the cloud is only very, very smaller today. So as a new customers coming into the adapting to the cloud transformation, we see a great opportunity. And further, what we do with the healthcare, we are building a lot of analytics, predictive analytics. That is also will be upselling on top of the existing portfolio. Also, we launched our successfully implemented our audit and security control for healthcare, and that is currently now accepting in more than four more clients actually coming in the next couple of quarters. So we see there is a multifaceted of opportunities in the healthcare and pharma. One is on the audit security compliance. The second is the cloud transformation itself, and the third is our cloud EasyRx platform.
You have also done an acquisition of a company. Can you just tell us that? What does it add to your portfolio? How will it help in the coming numbers?
See, every acquisition, if you see, we have done in the past several acquisitions. One is a Surge, which is on the healthcare. That is the one which really brought us a lot of domain expertise inside 8K on the healthcare sector. So that's where I said the audit control, what we implemented successfully, and now it is rolling into multiple customer opportunities. And we acquired Mindprint, which is in the analytics space on the CRO space. That is the same analytics solution now we are deploying in the healthcare and pharma sector fully. The last acquisition, what we done is a Sintel, which is on the more of a user interface. As the main market, like in the healthcare, very important is a user interface is very critical because the doctors are less computer literate, and whatever the thing presentation is very easier and has to be common across all the multiple devices, and that Sintel is helping. So all these are actually aligned with the 8K offering, cloud transformation offering.
Right. How are you placed as far as funding is concerned? Are you cash rich? Are you looking to raise funds? Valuations have expanded a lot in the company. If you need money, this should probably be the right time to raise funds. Are you looking at anything of that sort?
I like it what you say, but see, currently we are cash positive, and we are investing through our internal receivables and from the previous warrant fundraise. We are looking at some opportunities for acquisitions actually in the down the road. We have not identified fully any of the deals right now, but we may look at some opportunity at the right time to raise a fund based on our acquisition opportunities actually. We see the space is very hot. what we offer is a pretty convincing for most of the enterprise. So any complementary in technology or a domain expertise or a marketing reach, we would be happy to look at it actually. So we constantly look at for an opportunities, and when the right opportunity comes, and that's the time probably we go for a fundraise.
A lot of these large companies that we speak to after results tell us that they are investing a lot in the digital space, they are investing a lot in the cloud. Have any of the Indian large companies like TCS, Infosys, Wipro approached you for a strategic stake that they would want to look? Because that has been the buzz for a while now, that large companies are looking to take stake in 8K Miles.
I really don't know. I have not heard from anyone actually. See, we partner with a lot of the leading industry players in the US actually today. We work with even like a Microsoft as well as an Amazon, more approaching into healthcare segment and the pharma verticals, and a lot of other partners for alignment in terms of technology. We didn't look at any strategic investment at this stage actually. We are growing pretty much on our own, and we are really not looking at a strategic investment at this stage.
Mr. Suresh, thank you so much for joining us and explaining about the numbers as well as your plans going ahead for 8K Miles. That was the management of 8K Miles. Stock is up 8%. It's done about 400% gains in the last 1 year or so. Really has been a performer in the last 12 months. We're taking a quick break. Nifty is down about 6 odd points. On the other side, we'll focus on some stocks that are buzzing into it.